This is our first Markets Roundup, so really excited. YYC, welcome.
Thank you. Great to be here, and hope to fix this weird UI the next time we do this.
Yeah, so of course, being DeFi, our news director is Anon. Let's get into it. What's looking interesting this week in macro markets and crypto?
I think we're seeing a relief bounce across the board in stock markets, crypto, and everything else because we had the Fed hike rates again last Wednesday. And that pushed the dollar to the highest level that it's traded at in 22 years. And clearly it was breaking things, right? We saw the pound sell off last week. The euro hit 96 cents briefly. And let's just take a look at the chart itself. All right, so we can see here that the US dollar basically topped out right when on Wednesday when the Fed hiked rates by 75 basis points, and since then we've seen it pull back. And to be honest, this is as a simple investor, this is the only chart you need to be keeping an eye on right now, because everything else is just moving inversely to the dollar. We've seen this whole year the dollar has just been on an upward tear, right? Like this looks more like a crypto chart than a major currency. But it's been a parabolic move ever since the Fed at the start of the year indicated that they're going to be aggressive in fighting inflation. And so we've seen the dollar just, it's up more than 20% this year, which is probably its best performance going back a long time. At least as long as I can remember.
So what does this mean for crypto? Like you were saying, everything is moving inversely to the dollar. So dollar is going up, crypto is going down. And why does that happen? Is it because, investors would now just rather hold cash or just like very safe assets or cash-based assets rather than take the risk of holding crypto when they can still get some pretty kind of decent returns by just staying in the dollar?
Yes, absolutely. I mean, when your savings account is yielding you 4%, why would you want to take risks? First of all, like farming in DeFi for stablecoin yields. I mean, there is, even if you're using established protocols like Aave or whatnot, there's still some level of smart contract risk, right? And if you can make 4% sitting in your savings account, why not, right? And another reason is that the cost of capital itself is more expensive. So, I mean, a lot of the gains that we've seen in the stock market have come from cheap access to leverage, where investors were able to borrow dirt cheap, close to zero for the last 15 years, right? And they were able to deploy that capital into whichever asset. I mean, everything is basically rallied, right? We've seen the everything bubble, like some people say. It started with stocks and real estate in major countries. And then, of course, crypto, and the last leg has been commodities that we've seen this year, right? Of course, that was kind of exacerbated by the war in Ukraine, which kind of threw a wrench into the whole world's food supply situation, and we saw wheat and other commodities spike. And the same thing with crude oil, which spiked from 90 to about 130 in the month following the invasion, but has since given back all those gains. If we look at, we can look at the charts. So we can see it right here. So February was when Russia invaded Ukraine. We saw this massive spike, after the sanctions and banning of Russian oil, etc. But then since then, if you see it now, we're actually trading at January levels, right? So all those gains have been given back. And this has been a major source of inflation around the world, right? Because crude, like it or not, plays a part in every little piece of the economy, from production to transportation to, I mean, literally everything we use, plastics. Our consumer economy is just addicted to cheap fuel, right? And every time oil has crossed $100 a barrel, it's thrown at least if not the whole world, but major economies into recession, because we just can't afford it. We're used to cheap money and cheap oil, right? So it's going to be interesting to see what the inflation numbers look like, because a lot of the inputs that go into the formula have kind of weakened over the last few months. And though we didn't see it in the data for August, it's quite likely that the inflation numbers for September, which are due out next week, might just show us, an improvement in, or rather, lower inflation, which is exactly what the Fed is looking for, right? And I think that's the narrative that's driving this latest rally, in combination with US job openings this morning. We had some numbers come out which it's the biggest drop in a while. They fell 1.1 million in August. So that's a sign that, it's possible that companies are stopping new hiring. And we've seen that in crypto, of course, with a lot of layoffs and stuff. But that's to be expected with, our prices down like 80%. But in terms of the labor market as a whole, I think it's too early to tell. Obviously, it's a single data point. But it's a sign that the Fed's policies are damaging the real economy. And we had one of the Fed speakers, I forget who exactly it was, who spoke over the weekend, and they said, yes, that the rising dollar and is a concern. And they're, of course, wary of causing, damaging the economy further in the pursuit of reining in inflation.
And now let's hear a word from one of our sponsors, BitRefill. BitRefill allows you to shop online and physically without banks, converting your crypto into merchant balance directly without any sign-up. It offers more than 5,000 gift card options in 180 countries, and in the US, you can even pay bills like your mortgage or credit card. So creating a BitRefill account is not required, but it'll only take you a minute and you can get 1% cashback. So check them out, BitRefill, one of our sponsors, which makes these shows possible. So higher dollar, lower oil prices, a cooling jobs market, all of that means that inflation might be slowing.
We can hope.
Right, we can hope, which means that we can also hope that the Fed won't be compelled to raise rates as aggressively as it's been doing. And all of that combined, I guess, is what's, propping up risk asset prices this week. Is that right?
Yep. That's definitely one factor. The second one is traditionally August and September are usually the worst months for markets as a whole. Every year we see a major correction in that time period, and every year people get surprised, even though it's almost like a self-fulfilling prophecy at this point. And the fourth quarter is traditionally or seasonally the best for markets. We've started the quarter well, up 5% in just over 2 days. So we can see here, this is the S&P 500. So bottomed on Friday and then strong right out of the gate since futures opened on Sunday. And it's been closed at the highest today. So that's, a promising sign. Again, if we look at it in terms of the big picture, it's not like we've made that much progress, but it's a start.
And crypto has followed the same trend.
Exactly. The market's up 5%. That's the S&P and the Nasdaq. Bitcoin has followed pretty much to the tick. It's up 7%. So is ETH. So you can see here that the bottom basically came in on Sunday night for crypto. It was like a small small little correction, and then straight up out of the gate.
What do we need to see for these numbers to stay green?
If we have a look here, right, if we zoom out a little bit, this is the E chart. But if we zoom out just a little bit and drop some lines here, right, you can see that this is, for the last month or so, we've just been trading inside this range between, say, 1300 to 1350. So what we need to see is, number one, of course, is for the dollar to keep moving lower. I mean, every time investors have tried to call a top in the dollar, it just kind of corrects back and just makes another high again, right? So it happened here, like it's been an ongoing theme. But in this case, this sell-off seems promising, right? So what we'd like to see is to see this pattern of higher highs and higher lows get broken. So ideally, we'd want to see the dollar break under 107, right, which was the previous area of support. So that would then indicate, at least on a technical basis, that it's a reversal or trend change, and then we could probably see this, I don't know, like come in down like this, bounce a little bit, and then hopefully just die. From a crypto perspective, I mean, I've been saying this in the DeFi alpha calls that we do every week, that Bitcoin somehow seems to have this invisible hand that's been propping it up above the lows in June, because with all the bad news we've had over the last 5 months, there's been no reason for it to be holding up above that low, So Mike Novogratz from Galaxy Digital said last week that it seems like everyone who wanted to sell, or the forced sellers who got liquidated, are all out of the market at this point. And volumes have dried up, and it seems like we're just at the mercy of the macro winds. So crypto is just playing a following game at the moment. It's correlated with stocks like it's been for the last 2 years or so, and it's just behaving like another risk asset at this point.
Yeah, like you said, we're at the mercy of macro. So I guess the dollar is the main thing that we need to be watching to see what happens with crypto.
Yes, absolutely. The Fed, I'm sure, will come out with some, it would be unlikely that they pause completely or go back on not hiking at the November meeting. The next meeting is on November 2nd. But it might be a lower hike than expected, maybe 50 basis points instead of 75. That in itself would be,
Calls for a rally.
Yeah, I mean, most market participants would see that as a sign of a pivot, right? Because let's be honest, these policies are breaking things all over the world. I mean, the UN Development Agency came out and has asked the Fed to stop raising rates, right? Because it's not just the US, right? When you look at the rising dollar and rising rates on the US dollar, it really wreaks havoc around the rest of the world, because a lot of countries have debt that's denominated in dollars, right? So for them, a rising dollar means it becomes more expensive to, sell their foreign currency to get their hands on enough dollars to repay the debt. And at the same time, inflation means that they can't afford food, fuel, all the essentials that we need. And we saw this actually play out in Sri Lanka, right, a few months ago, where they essentially ran out of foreign currency to buy fuel. So there was no gas in the gas stations, right, for weeks on end, and people were just paralyzed. So that just goes to show you how dependent on oil and the dollar, right, the entire world is.
Yeah. So that means that there's just a lot of political pressure for the Fed right now to not continue hiking. Though I know that central banks are supposed to be independent. So they have these mandates, these inflation ranges that they need to hit. So I think kind of these pleas by the UN might also go so far. In the end, like the main thing that they'll be watching is inflation print.
Yep, absolutely. I think the payroll numbers that are going to be out on this coming Friday, that'll be one of something to watch. It'll give us more insight. It'll be a second data point after this jobs openings number that came out today. And of course, inflation next week.
Glad to see our charting tool here. Not glad to see the ETH price though, that it's showing.
Let me fix that, right? So we can just make it look slightly better. Yeah?
Nice, okay.
Yes,
good.
That looks better.
That looks better. So we're pretty clear on what to look for next. The inflation print, when is that coming out?
Next Tuesday, I believe.
Next Tuesday. And then the big thing to look out for is the next Fed meeting. And that is...
First week of November 2nd.
So that was our first Markets Roundup with the Defiant. Hope you all enjoy it. Leave us your feedback and comments on what you'd like to see in the following ones. And yeah, stay tuned for next week.
Yeah, thanks everyone for joining us. And see you next week.